annual series called Tax Talk as people get ready to file their 2022 return. From Willis and Jurasek, CPAs and consultants, CPA Ryan Parshall. Ryan, welcome to the show.
Thanks, Bart. Good to be here.
Yeah, great to have you here on our 22nd anniversary.
22nd, and this morning Karen let me know that, and I'm like, wow, it's a lot of pressure. So thanks for having me on.
Yeah, can we deduct that?
Sure, you can deduct anything you want, just don't get caught.
Well, we appreciate your service in Willis and Jurasek. All these 22 years, the entire 22 years, you have been, Willis and Jurasek has been our trusted accountant. So thanks so much.
No, thank you. It's been great over the years.
And I was going to ask you if you brought me a gift, but I saw a big giant envelope.
Hey, that's your tax return.
Thank you.
Got it in, got it done, got it out. So
we appreciate that.
Yeah.
Nice job.
Yeah.
So I guess people don't, it's inevitable, along with death, taxes, people need to get everything in order to do their preparations. Anything new this year?
As far as new goes, there wasn't a whole lot as far as 1040 filing, business returns go. A lot of that has kind of come along the ways over the last few years. The big sweeping changes happened in 2016 when President Trump was in office. But for this year, deadlines are pretty much the same. Filings are the same. The only difference is, and this has been here for a minute, 1040s, those are pushed back a few days because of usually holidays or weekends. So 1040s are due the 18th, I believe, this year rather than the 15th. But as far as the actual tax law goes, there's not a ton. Last year, historically, you were only allowed to deduct 50% of meals and entertainment, or meals, I should say. Entertainment went away under the Trump laws. To help restaurants out in 21 and 22, they're allowing that 100% business deduction of meals. So that is good again for this year.
Yeah, and unfortunately it goes away after 22.
It does. You never know. The tax law is constantly changing, so they could bring it back.
And there's so much discussion both in Lansing and in Washington about changing, and really some dramatic changes. Last week, members of Congress were talking about looking at a national sales tax, doing away with the income tax and the IRS entirely. It's got to be just crazy talk at this point.
It is crazy talk. You never know. I mean, I've heard this 6-7 years ago, talking about a national sales tax rather than that. I can't see it happening. I just can't. I mean, there's too many, and not to be political, there's too many interests involved for that to ever happen. So I can't see it happening, but who knows?
Yeah, I agree. It's really out there, and there's so many special interest groups that, they fund Congress people.
Absolutely.
That's just the way it is. So not likely to change. And then here in Michigan, the governor talked about some changes she wants to make with the EITC and also the retirement tax. Those are just proposals right now, right?
Yeah. Now, the one thing is that's kind of gaining a lot of speed right now is kind of incentivizing the whole retirement system to get people to invest more in their retirement. There's a lot of things that go along with that as far as like taking required minimum distributions at a later date, being able to inject more dollars in there, and actually requiring some businesses to have their employees automatically enrolled in these plans if you're already in an established type retirement plan out there. So there are some changes coming along the way on that. Nothing set in stone yet, but yes, that's gaining speed.
So really another reason to have a tax professional do your taxes. Do you prefer that people come in with a shoebox full of loose receipts, or a file folder or a 3-ring binder neatly organized?
Well, the latter, of course. But, I've always been one, A shoebox is great because I know everything's going to be there. What does not help us out is an email here with one piece of your tax work, another email, another email, another email. I like it all in one bundle, put together, W-2s, any business expenses, all of that sort of stuff, put in one package delivered to me at the same time. It just creates efficiency, and then it's better. You pick the tax return up, you go through it, you know you have everything there, and then you can start asking the questions.
You mentioned earlier that tax forms, W-2s, have to be distributed by the 18th. 1099 is another form that is generated. So who has to worry about 1099s?
Well, actually 1099s, so if you haven't filed your 1099s, they're due tomorrow.
Okay.
But 1099s, there's a lot to them, and a lot of my clients are confused on who gets them, who doesn't get them. The first thing you got to think about, is it a service or a product? If it's a service, potentially we need to 1099 them. If it's a product, if I'm going out buying supplies, no. The second thing you need to think about is, did I pay $600 or more for that service? That takes us a step further into, do I need to issue 1099? The third piece that you kind of got to look at is whether it's a sole proprietor, an LLC, an S Corp, or a C Corp. Because C Corps and S Corps, you don't have to 1099 them, but sole proprietors and LLCs you do. And this is only for business, like business to business for services. If you go and have someone work on your furnace at your house and it costs $800, you don't need to 1099 them. The reason it's only business to business is because a business is going to deduct those expenses on their tax return. And so the IRS wants a way to make sure these sole proprietors and LLCs are claiming that income.
So if you've got a guy that does your lawn, you don't have to worry about it unless it's your business's lawn.
Correct, yeah.
Personal property taxes for business, are there any changes for 2023?
There are, and this has kind of been changing. This goes back to 2015. It used to be anyone that owns personal property being this table, these chairs, anything like that, was subject to a year-end evaluation, and when you're over a certain threshold, or 7 years ago, any threshold, you had to pay a tax on that. Well, the state of Michigan then put into law, which trickles down to the municipalities that tax you, that if your personal property has a taxable value, a taxable value of $80,000 or less, you don't need to file a PPT return. It has changed for this year. They've upped that threshold to $180,000.
Oh, wow.
So it's a nice little boost there. What I can see happening with this is it's eventually going to go away, which in my personal opinion, it should go away. But that is a bigger change this year. So some of the people that weren't exempt in the past are probably exempt now because of that change.
So personal property tax does fund a lot of governments, right?
It does. I mean, over the years I saw that piece kind of start to dwindle. Where they really get it is with your real estate property taxes. That's where the most of the funding comes in. But to me, there could be other ways of raising revenue outside of the personal property tax. It's just, some of it's silly, this poor table has probably been taxed year after year after year, and it's just kind of silly.
It is. I agree. You think about a farmer who's got a $100,000 tractor.
Right.
He paid for it. He worked hard to pay for it, and just because he owns it and uses it in his farm, he's got to send a check every year.
Yep.
It's insane. I think.
Yes, I do too.
Wow. All right, so if you have any questions, really the best thing to do is to ask an expert, and that's why we ask Ryan Parshall, and we ask Ryan to be here on our Tax Talk series. Well, thanks very much for coming in today.
Thanks for having me.
I appreciate it.
Congrats again on 22 years.
Well, thank you. From Willis and Jurasek, CPAs and Consultants, CPA Ryan Parshall. Yes, Ryan